Hey everyone, and welcome to a trade recap. It's been a while since I did this, but I thought I would share some value, especially with adding in the 4-hour momentum filter as well, which did play out really nicely in conjunction with this trade idea. So this was dollar Swiss on the 1st of August, and let's run through from the 4-hour. And we'll go through the whole sequence of events that led to me taking this buy and a few others as well in the community. So first of all, just like my live call on Tuesday, which has now become or will become the content video for 4-hour momentum filter, just zooming out and having a look at where that overall 4-hour momentum is. And just using, you could use anything you want, but using some kind of a draw tool just to outline, okay, we had this previous accumulation over here. This was a range low, and that range lasted a while. This was the actual range, right? Let me draw the whole range. And then if we take the highest point of that, which is here, the next point of which we obviously break down here. So price was pretty much sideways. Ignore what happened previous to that. This is literally weeks ago, if not months ago. But we can't ignore the fact that we've had this real momentous push to the downside, which has produced consecutive lower lows and lower highs. Lower high, and this was the final lower low. So if I zoom in and just draw a line on that low, we want to consider momentum, in particular for a filter for not taking or taking counterplay moves. Directional bias, pro-directional bias, we always want to be taking. We're trusting the process, the strike rate is good on that. We know we can trust that process over time. But with counterplays, we know that the strike rate is slightly lower and the risk is slightly higher. So hence coming up with a filter. And there has been at least one, maybe two losses this week so far that the filter has kept us out of taking, right? But we can see here, yes, we were making consecutive lower lows and lower highs. In particular, we had at least two, actually had three of them. We want minimum two for a shift in direction. So lower low, lower high, lower low. That's the last one. Okay, we get an initial break where the directional bias, let me see where the range would have been at that time, would have been here. So the interaction point is here, right? We have one candle which is unconfirmed, then a bearish candle, so that was actually no follow through initially. And as it's only one higher high in a bearish momentum, we can take sells in here. So, plus it was pro-directional bias sells anyway. So this was obviously weeks ago, but I'm just talking through the whole scenario. As soon as we get that second bullish close above that fractal, that then becomes follow through, right? And then price goes on and eventually takes out that high, creating a second high, and in the process, our first higher low. The fact that it's taken two high highs now means that the momentum has shifted from bearish to bullish, right? So it doesn't matter how deep this next pullback goes, because this could have easily just done that, or it could have done that, and it ended up doing this. Doesn't matter, right? Momentum is to the upside because we've had two high highs. And then we want to factor in clear and simple directional bias after that. So obviously we switched to the downside. Then our range finally would have been down here. Not factoring too much into the fact that it's done something over here as a rule base, but we can see that it's taken liquidity. We'll be looking at that after the matter has happened. But it's mostly the fact that momentum is still bullish. Yes, we've had a lower low, but only one of them. So just like we had this one higher high, we're still looking for sells, still bearish until we get a second higher high. In this case, we've had a higher low and then one lower low. So only one was still bullish, still looking for buys. And of course, the icing on the cake is the fact that we get bullish, strong follow through from our range high. So directional bias is bullish, momentum is bullish. At that stage, we're only looking for buys. It would also take us out from looking at counter sells with strong follow through. So then bringing ourselves to more recent price action. So this would have been the range initially. Dragging this new range up, this strong follow through, looking for buys inside of here. Price then interacts with this range high and we get another strong follow through. Another consecutive 2 body closures without an initial wick. So then what is our range? Our range is the most recent fractal before that up to the highest point. So yes, you might be thinking, well, can I counter strong follow through? I can buy and sell in premium. Yes, true, it's valid, but it's lower probability when momentum is against you. If we're looking for buys as pro momentum and pro directional bias, but then you're looking at counter sells, momentum's to the upside, remember 2 higher highs, only 1 lower low, then you're significantly reducing the risk of that trade idea playing out. So for me, I knew I was very busy that day. I was taking the whole day off for the kids, apart from checking London initially from my laptop, and then when I needed to from my phone, trading from my phone. Then I was looking only for buys. And with strong follow through, we don't even need to factor in premium versus discount. We're happy to take buys anywhere, right? So it dropped down to the 15 minute and we had this pullback overnight. So I'll just play that till the morning. Just waiting for London kill zone to kick in. There. 15-minute range box. Always start left, don't start right. We can see it initially was here. Took the high. New range low. Expand that over. That was our 15-minute range. Strong follow through. Looking for buys. We can take external range liquidity or we can take internal range liquidity. So the most recent fractal low is here. Set an alert on this. As soon as that alert hits, and yes, it's not a 1 pip sweep, which is ideal, but you can still take a trade no matter what size that sweep is, right? That's down to you and your testing or your personal preference. A sweep is a sweep at the end of the day. It's just the size of the sweep is increasing the chances of it, probability playing out. But we've done all of our homework. The 4-hour directional bias is bullish. We've got momentum to the upside with it being strong follow through, which holds more weight than even follow through because of that momentum. Plus we've got actual market momentum to the upside as well. I'm zooming out. So if this wasn't going to play out as a trade, I'd be like, well, I'm really happy that I took that trade and that's just probabilities. So very quickly, and you would have to be very quick, setting a buy stop on this. I know a few of you market executed and that's absolutely fine, because the distance between that close and the open was something like 0.1, 0.2 pips. So there's not much breathing space in there. And then also factoring in stop loss size. And I recommend doing that before the candle closes. I know the candle in the last few seconds can shift, but a lot of the time if a trade idea like this is going to play out, you don't tend to have to move your stop loss size that much before the close. So it's 7... So round it up to 9. There we go. I had 9 on there. And knowing that with strong follow through, you need a minimum 2 to 1 before the high, right? There's a fractal there. But we can get 3 to 1 even before that. So I was happy to take that. I actually set my TP afterwards because you've got to be quick, especially trading from your phone, especially when using stop orders when the candle closes very close to your entry point. So I'm literally just putting the entry and the stop loss and then buy stop straight away in MT5. And then afterwards I'm going in and modifying that order and then putting the TP in, okay? Because it's very unlikely just to go in like 30 seconds and hit your TP without you, right? So then that plays forwards. I'm literally out. And then we hit TP for 3% and interacts with that 4-hour high. So we're then at that stage unconfirmed anyway. And there was no opportunities during New York, which was great because I was out with the kids and it's chilled. If we can take maybe 2 to 3 trades a week over a couple of pairs, even just one pair, 1 or 2, 3 trades a week. That's ideal. We were getting to a point where we're sometimes taking maybe 3 trades a day, and with a strike rate of around 40%, not necessarily a good thing. So adding this filter in here is increasing the probabilities of trades playing out, increasing your strike rate, reducing emotions, reducing the amount of losses that you take, in particular on counter moves, but also remembering part of this power of 2 strategy is reducing that chart time. And this week's been testimony to that. A lot of you have been patient, you've picked up on this momentum filter really quick, and it's allowed you to sit on your hands more. The messages that I'm getting and the comments in Discord that I'm seeing, that I've never been so relaxed in my trading before, I've never had so much clarity in my analysis. That's what it's all about. And then obviously just consistency over time. If you're taking 2 to 3 trades a week and you need at least 10 trades as a sample size to say, okay, this is my probabilities, and even 10 trades isn't a lot, but you know, you could take 3-4 weeks before you decide, okay, this is what my strike rate is. Don't take like 2 or 3 trades or 1 week and say that's my strike rate. And also just make sure that you're taking valid trades, right? It's up to you if you want to use that 4-hour trade filter. It's there for you to use if you want. I'm not saying you need to. You don't have to do it as a rule, but I'd recommend going and doing some testing to give you that confidence of whether you'd like to implement it or not. Hope you enjoyed the video, and I'll catch you guys and girls on the next one.